Our first guest this week is Dr. David Cunic. He's the CEO of UCS Advisors, frequent contributor to the program. David, welcome back.
Thanks for having me, Don. Always a pleasure.
Now, we usually talk to you about cannabis-related activities, but this week I want to talk about funding for small companies. You know, the reason for small companies going public is to get access to capital, and that's becoming increasingly more difficult.
You're absolutely correct. We're definitely seeing right now here in the first quarter here in 2023, a lot of investors sitting on the sidelines, waiting to see how things play out. And the other thing we're seeing right now, a lot of small companies is, as we tell our clients here at UCS Advisors, don't be lazy with your investor data room. You need to make sure you have all your ducks in a row. You need to make sure you have your proper ask, your proper offering, your proper pro forma, your proper pitch deck. You have to make it really simplistic for the investor. We're seeing companies that are fully prepared with their investor data room having some success and actually getting follow-up calls with investors versus people that aren't taking the necessary steps to get the proper funding.
Investors and funds are being increasingly more selective, aren't they?
They are. They're being highly selective right now. And it's definitely an investor's market. But investors are still putting in money to small companies, even in the public sector, if they have all their ducks in a row. The other thing is, too, is that something we tell a lot of our clients here at UCS Advisors is keep putting out the press releases. Talk to your shareholders. Let them know what's going on. By being radio silent, it doesn't help anyone. It doesn't help your company, nor does it help your shareholders, nor does it even show the potential investors where the company's going. Investors
like to see activity, and when the company's, as you say, radio silent, there's no activity whatsoever.
Exactly. Sit here, do interviews like this here on MoneyTV, put out some video clips about your company. Also, really communicate at least once every 2 to 3 weeks with a press release. It's amazing how many of these small cap companies are looking for funding, but they haven't put out a press release in 3, 4, or even 6 months.
It is amazing when you think about that. Now, funders, we said they're being more selective. What kind of categories of businesses are they looking at more closely these days?
In our opinion, we're seeing investors really looking at companies that have a strong management team, that are already bringing in revenue. And surprisingly, a lot of investors are looking at companies that have both domestic and international revenue streams. So not solely relying upon the United States.
Are they industry agnostic?
They are industry agnostic, very much so industry agnostic. That they're really looking at overall that revenue stream and to make sure that the business is still increasing. A great example is we have a few clients here at UCS Advisors that are going to increase their revenues by over 200% this year. Now, having that type of growth is attracting investors' attention versus companies that are flatlining or decreasing every year in revenues.
Now, with the economy in questionable mode, how is that affecting funding for companies?
It's a lot of investors are kind of sitting on the sidelines right now and seeing what's going to shake out over the next 60 to 90 days. And that's where we're telling a lot of people looking for funding, keep the lines of communication going with the potential investors. That potential investor might say to you, okay, I'm not going to invest any money in the first quarter, but talk to me in the second quarter. So make sure you keep those lines of communication open, because money is coming off the sidelines and being put into companies that are increasing their operations.
People are investing every single day. We know that. And it's just really the ones that are making the most noise that are going to get the most attention.
Exactly. The ones that are making the most noise are getting the most attention. The ones that also are communicating with their shareholders the good times and the bad times. And they're showing their shareholders, they're showing their investors how the company is going to get over this hump right now, if they are in a hump or in a slight downslip, showing how they're going to recuperate and how they're going to actually increase their revenue and increase their operations. But money is out there. And like you said, Don, it's being invested every day, but you need to plan accordingly.
A lot of companies that we talk to find roadblocks related to liquidity or trading volume. In your experience, is that a real roadblock?
It is a roadblock. It's a significant roadblock because We tell people, what has your trading been like for the last 6 months, 9 months, last year? If you've had very little liquidity, you've barely been talking to your shareholders, you have very limited press releases, it's going to scare a potential investor, or it's going to be really a yellow flag for them. So liquidity every day is important for your company, especially in the microcap world.
Of course, you're advising companies every day about funding, about operations. What's the three biggest mistakes you see small companies making?
The three biggest mistakes. Biggest mistake, first one is failure to plan, is planning to fail, meaning that they do not have a set roadmap for the next 3 to 6 months, even 9 months for their fundraising. The second biggest mistake we see is lack of a proper investor data room. Serious investors want to have simple access to your data room. And the third biggest mistake that we're currently seeing right now is valuations. People think their valuations don't change every day. And the fact of the matter is, valuations do change every single day. And those are three of the biggest mistakes we're seeing right now.
I see a lot of people that think the stock's trading at 10 cents or 5 cents. They put out a press release. They can't believe it didn't go to 50 cents or 60 cents.
Exactly. And that goes back to the consistency in the press release. Let's say you put out a press release today, do a follow-up with a press release another 10 to 14 days. Something we tell our clients here at UCS Advisors is, if you put out a significant press release 3 or 4 months ago, do a follow-up press release on the status of that. There's so much news out there you can give to your shareholders. Don't be afraid to share it. Your shareholders want to know what's going on with the company.
I tell people all the time that you can react to news that's happening in your industry and use it as a press release as well.
Exactly. And it's just amazing, just taking that simple press release, how then you can put that on different social media formats to get more access and more eyes on your company. And once again, also too, Don, what you do here with MoneyTV is also a great example. You can take these interviews and show them to your shareholders, share it with them. It's amazing how many people like to just watch their news now instead of actually reading about their news.
Well, it's really interesting because if nobody knows about your company, nobody's watching your company, nobody's going to see that press release.
Exactly. And that goes back to, once again, communicating with your shareholders, communicating with your investors, and really having a proper calendar in terms of social media marketing, in terms of press release marketing. If you really need to make that 90 day to 120-day calendar ahead of time, so you're consistent with communication to the public and to your shareholders.
Sage advice. Dr. David Cunic, UCS Advisors. David, always a pleasure.
Thank you for having me, Don. You have a great day today.